Good morning, ladies and gentlemen, and welcome to the show on this Wednesday, the 25th of August, 2021. Thank you for tuning in. What's the best that we can hope for? Is that we don't have a market crash. And, if the Fed, I can't see behind the scenes. They have so many different avenues of modern monetary theory and controlling money that whether see, they might be doing things behind the scenes. They have an awful lot of tricks up their sleeve, the way they can distribute money within the financial system, and maybe they will be able to keep this thing going right through the new year and through the first quarter of the new year without having a market crash. It's entirely possible because look, there's things going on like the IMF releasing 650 billion in SDRs, and those SDRs are worth $1.45 a piece, which is roughly $1 trillion. Where's that money going? And they got these black pools of money out there, off-book money, tremendous amounts. Catherine Austin Fitts did work with Dr. Mark Skidmore to show how that there's over $20 trillion outstanding that's off-book, off-balance sheet money. There's tremendous amounts of money. The Exchange Stabilization Fund. It goes on the list of different avenues that they have and different ways, through the repo market and stuff. What about that $1 trillion in the repo market that they've got stuffed under the mattress? That the banks have basically given their liquidity to the Fed in exchange for collateral. So many things going on behind the scenes. I can't say for sure that there's going to be a crash. And, the Federal Reserve itself does not want a crash. So now they're talking taper. They're going to have this big symposium out at Jackson Hole, probably this Thursday, just a day away. Here, look, there might not be a crash. So you guys got this total expectations of a crash. It might not come. But what if it doesn't come? Let's say it doesn't come. Then by the time we're through the first quarter of next year, the inflation's going to be so bad, the inflation's going to start to feed itself. Self-perpetuating, self-feeding cycle. And the reason why is people start to get a philosophy or a mindset. I'm going to get rid of this bad money as fast as I can spend it because prices are going up. And I'm going to transform it into real goods and services. So the money velocity will start to pick up. I know money velocity's been on a bottom. It's been on a bottom-making spree. It's been making bottoms. If you look at any chart long enough, you start to understand charts. And you realize that the money velocity chart has been making bottoms. What does charts do? After it successfully makes several bottoms, what does a chart typically do? Starts to go back up again. It's typical charting, That's why you want to buy commodities and things when they've made maybe a double or triple bottom and they're getting ready to go back up again. The other way, So that's what we got in front of us. If they are able to sustain the system, the Fed, and keep it from having a big crash in the next few months, then we're going to be moving into tremendous inflation. But it's going to be a little bit slower process than if we do have a crash. Because if we did have the big crash, they can't let the system completely purge out all of the bad. Because it's all bad now. I mean, take a look at a lot of the things that the Fed has put on their balance sheet. It's garbage. It's worthless. And what the system really wants to do is purge out all of this malinvestment. Well, 90% of the system is malinvestment right now at this point. So they can't let it happen. And so if we get a crash, They'll have to come in at a certain point and rescue the system. Then it's going to be more of an instant hyperinflation rather than a slow trudge toward hyperinflation. So if we don't have the crash by about March, we're going to be slowly trudging toward hyperinflation, but it'll be set and it'll be permanent then at that point, and it'll be something that you, even if they were to tighten at that point, it's not going to have any effect on stopping the inflation if they wait until about March. February or March of next year. In other words, the inflation will have won, and there'll be no going back at that point because they've already created enough money for the hyperinflation. Let's get into the markets now. Let's open up the markets right here, take a look at what's going on. The first thing we're going to take a look at is the silver and gold price. Now, you guys are probably thinking to yourself, when is silver and gold going to take off? It's really going to take off when it's absolutely proven beyond a doubt that the inflation's here to stay and it's going to get worse and worse and worse. And if you've been listening to what I've been saying the last few minutes, you realize that that's going to be somewhere probably in around March of next year, or even February, along in there. It's hard to give an exact timing of it, but it's more of a psychological thing than anything else. So I'm predicting human psychology. I'm predicting the result of human psychology, and that psychology is we don't trust the purchasing power of our currency any longer. And when we get our currency, we're going to try to spend it as fast as we get it because we know that prices are going up so exceedingly fast. Once that philosophy is entrenched amongst the population, then it doesn't really matter what the central bank does at that point in time. You're in a inflation that's rolling into hyperinflation. This whole thing is going to end very badly, and I'm going to tell you guys why. It is because of hyperinflation, when it starts to rob people of their purchasing power, it also robs them of the ability to keep their lives going. So they have to make hard choices. They can't afford rent and food and the power bill and to pay their taxes and everything else. They're being squeezed, and they get food insecurity starts to spread across the land. And they start going hungry. And when people start going hungry, they get angry. And so then they form together in groups of angry people that are hungry. And there's a difference. We went into this COVID crisis originally. The people were angry. And you saw what they were doing in the cities. Right? You remember that. But those people were angry. They weren't hungry. Hungry, angry people are much worse. And they will tend to go where the food is. And the food's at the grocery stores. So just think about this. Put it together. You got hungry, angry people. And they're forming together into groups. And they're going to the grocery stores. Well, don't they realize it? Actually, they don't realize that they'd be cutting off their food supply even further if that happens. And I mean, it's only an if, but this is where the direction of, if you use your head and you start to think about this for a minute, this is the direction logically that you'd think it'd be like, after it happens, let's just put it this way. After it happens, you'd be like, that was a no-brainer that was going to happen. We seen it. We should have saw that coming. It's going to be one of those things that, as an afterthought, that we should have saw that coming. And it can create terrible social unrest problems, and it's not just localized to the United States, this phenomenon. It's a worldwide hyperinflation. We've never, ever, ever, ever had a worldwide hyperinflation before. Robbing people of all across the world of their... We've seen things like this happen in Venezuela, but it's just like in one country, and we've seen the people so hungry that a truck's driving by on the highway and it's got food on it, And quite literally, they raid it, and everything because they're just so hungry. Also, they say the average person in Venezuela lost like 20 or 30 pounds or something. It was some ridiculous amount of weight that they lost. And these are just average people, not a big, really big person, I mean, they can afford to lose 20 or 30 pounds, but you get an average person and they lose 20 or 30 pounds and you start to see their bones. Things are going to get pretty bad, if we go into an actual hyperinflation. And, the best advice I can give you is if you do actually see these things happening, you know, uh, don't sit around like a news reporter watching to see what's going to happen. If you hear craziness start to break out, someplace, don't head toward the craziness to see what's going on because you could get involved in it. Go in the opposite direction as fast as you can because that's safety. It's just like if you see a gas station and it lights on fire and stuff. There's some guy in there and he did something and whatever. Don't just stand there. You could get caught in a what they call a blevy. It's called a blevy. That's what it's called. And you get out of there. Get in your car and go the other way as fast as you can. Don't stay around to watch. Because this is a dangerous world that we're in right now. Very dangerous world, And it's going to get a lot more dangerous, especially as the money starts to crack up and the whole world starts to go crack up with the money. The world will crack up with the money. When the money cracks up, the world will crack up too. And it's all you think it's bad now, it could get a lot worse. If you're smart, avoid the trouble, you might come through this whole situation. Because I don't think it's going to last that long either. The dollar is going to go down, and all of the fiat currencies are going to go down with it. And I don't think this situation is going to last very long at all because I think it's going to be a quick thing, fairly quick. And so the trouble that comes with it is going to be quick, and they're going to have to do something. They're going to be forced into action, the people who are in charge. It's going to be some sort of new Bretton Woods or whatever, some sort of reset. And on the other side of that, maybe we'll have more stability again. And things can go back to more to normal, Maybe by that time, maybe we'll be rid of these viruses. And maybe the Earth will start to have a little bit more of a normal period again after this is over, This is one of those things. It's almost like when you have a big pain or something and you have to go to the hospital. It doesn't last forever, Anyway, I'm rambling on a little bit here. Let's get in there and take a look. 14 cents down on silver, 23.72. 23.72 today. And now we're going to take a look at gold. Gold is at $17.85 and it's taken a dip of $17.20. So it's back down below $1,800 again today. Cryptocurrency today it's cooled off a little bit too. It was over 2,100, now it's 2,067. We're looking at a Bitcoin price of $48,497. So it's backed away from $50,000 today for cryptos. Take a look at the Dow Jones, and the Dow Jones is up 73 points on the day at 35,439. It did take a little dip there, but she's back up. Now we're going to take a look at crude oil today, 67.65. And it's up 11 cents on the day so far, so it's getting up near the $70 mark again. The MOVE index today, we're looking at the MOVE index at 63.03, so it is climbing, but very slowly. It was in the 50s, now it's in the 60s. Doesn't really get to be a problem until it gets up quite high, I mean, you're starting to get a problem if you're getting up around 80, 90, 100. It can shoot up so fast if instability comes into the credit markets. This is your window into the credit markets. And I only look at this because the higher the number, the more unstable the credit markets are. Bonds and rates today. What we're looking at is rising yields again. 1.33 on the 10-year. It's up 4.9 basis points. Now, that's quite a big jump. 30 years up 4.3 basis points at 1.95. So we're seeing yields rising today on the treasuries. Dollar index today, 93 on the dollar index, and it's kind of going along sideways. That's been your show for today. Thank you guys for listening to my show, and now we're going to take a look at some pets. Bye-bye, guys. Okay, now for the pets. Our first pet is from Christopher Moberly, and he's got a cat here, and he forgot to put the name of the cat in, but she's awfully cute. Here she is laying sideways on a box, and she's got like, she's saying like, come over and give me a pet here. And here she is on another carton, laying, having a relaxing nap with her legs outstretched and everything. So she's awfully cute. Now for our next pet is, this is Sassy. And Sassy is since passed on, but she used to run around the table in one direction while her dinner was being prepared. And it says that's the one direction that she liked to run around the table in while her dinner was being prepared. So this is Sassy. Now we're going to take a look at next pet, which is a turtle. And this is a Galapagos tortoise, and her name is Duchess. She's 30 years old. She lives in Florida. And it says here that she's not furry, but she says she's very loving and friendly. And evidently, you know, I'm going to tell you about tortoises and turtles. They can live an awfully long time. Some of them, I guess, live 300 years. So she's 30 years old. So she's just a spring chicken as far as some of them are concerned, because turtles can live an awfully long time. Thank you guys for listening to my show, and we'll catch you guys in the very next episode. Bye-bye.